Hello and welcome back, and thank you for rejoining us again on this is day 4 of our Forex strategy guides. And literally today we are going to talk about some indicators that we use. Now, yesterday we talked to you about trend lines and the importance of looking for trends and support and resistance and ceilings and floors, and how this all works as regards to looking at charts and working out where the markets are going to go, where the trends are going. Well, today I'm going to share my screen with you, and I'm going to show you 3 of the indicators that we like to use the most, the simplest, nicest ones. And I'm also going to show you something that you should be doing before you trade, which is vitally important as well. So I'm going to jump straight in and share my screen. Share. All right.
Awesome.
Is it coming up? There is it. Let's just, sorry, just dropped it over the top of it. There we go. Can you see Forex Factory?
Yeah, got it.
Right, okay. Forex Factory is a free website for anybody to use, forexfactory.com. Now, this is an incredibly helpful tool to any trader. Firstly, you want to make sure that it is set up to the country that you're in. So there's a little timestamp at the top of Forex Factory. If you click on that, it gives you the options, and you just literally put in your time zone. So obviously I'm London, Europe time, and just save your settings. And then that way, your Forex Factory is set to your time zone, so you can see a little bit more precisely when things are going to happen. Now, it gives you a rundown of the week ahead. And this is vitally important because the news can affect trades quite dramatically. It can affect a pair, it can make things go against trends, it can make candles spike up or spike down. And people have been known to maybe be in a trade and then a news has hit and they've not realised the news was coming, and it might have hit their stop loss, whereas before it would just gradually kept going. Now, Forex Factory break it down into 3 categories: yellow flag news, orange flag news, and red flag news. Anything that's flagged yellow is it's important, but it's not going to make a hell of a difference to your trading. So I tend to ignore the yellow flags. They don't seem to ever have a major effect on what we're doing. Orange flags I tend to take notice of, but not as much. If there's lots of orange flags, there's obviously going to be something going on, so take a note of that. But they're not as important, and they don't affect the markets as much as what red flags do. It's the red flags that you want to be aware of, and you want to make sure that you know what's coming up throughout your day, and even ahead in a couple of days if you're a long-term trader. So
Red for danger.
Red is danger, yes. Wednesday today, we have a red flag on the US dollar at 1.30, and we also have another one at 3.30, and it gives you a little indication of what the news is going to be, and you can even go in and open up the news and sort of find out a little bit more details if you want to. But red flag on USD, there we go. Don't need to get rid of that. See, not very technical, but it doesn't matter. Anyway, US dollar news today. So you need to make a note of that before you start trading, because it will affect your trade. Okay, so either don't trade red flag news, or just make sure that either an hour before or an hour after that news is going to hit, that you've got proper risk management in place, your stop lists are nice and tight, because it can either go either way. Sometimes it works in your favour. If you're in a buy and the news is good, it can take you into more pips profit. But it is a gamble. It is a gamble when you trade the news, because you don't really know how the markets are going to react to it. So we tend to avoid red flag if possible.
Yeah, that's a good point. We don't gamble. Again, people that say it's risky, we don't gamble. There are times you can do everything absolutely right and the trade will still go against you, which is why you have to have proper risk management.
Yeah.
As long as you've got your proper risk management and you use the stuff we're showing you, trend line, support, resistance, what Sarah's going to show you today, the odds are in your favour. So you should be winning more than you lose. Okay. So, but don't ever get to the point where you're gambling.
No, definitely not. Right, okay, I'm just going to move our screen over there. Is our video pictures, Paul, out of the way of the chart?
Well, I can move it on mine, but we're the top right. So as long as you kind of
okay,
the action lower down, we're fine.
Okay. Yeah, because you can't move it because it's going to be right over the top of what I want to talk about. Anyway, right, we can still do this. We can still
Put your mouse in over the numbers on the right hand side.
Yeah.
You know where the prices are on the right hand side?
Yep.
Over on the right, that's the left. The other right.
Over here, yeah?
Yeah. Click and drag that up and down. Not working?
Not clicking and
Because
dragging.
we're on the web scanner. Never mind. Okay, no worries.
Anyway,
no worries.
we can do this. Right, anyway.
Yeah, we can see what we need to see.
This is the web scanner, the MT4 scanner. They're going to look different on everyone's screen because you can set the colours and the things you want to do. So don't think, oh my God, this is something new. This is something that Paul's already shown us, but mine's a different colour because just people set them to what they like. It's not a problem. Okay, still got your timestamps across the top. Everything else is the same. Right, now, indicators that we like to use. The indicator that I'm going to talk about first is the RSI, which is called Relative Strength Indicator. So to put that onto your chart, you go to Insert, Indicators, Oscillators, Relative Strength Index. There it is. You drop it on, and we are just going to use the default settings on here because they're good enough. I'm going to go to the hour chart so we can have a look at this properly. Now, the relative strength index is this blue wiggly line at the bottom. This tells you when the market is either oversold or overbought with a good chance of it reversing. Okay, nothing's guaranteed, but this is a good chance of reversal on these patterns. So we've got some numbers here. There's a 70 and a 30. Now, what we do is we match up our candles with the relative strength indicator. So as you can see here, when this come down here, the relative strength indicator went below 30. Now, if it's below 30, that means this is oversold, and the buyers want to get back in control and bring it back up again. So anything under 30 is oversold. As you can see, when this came down, this was oversold, meaning it should have a good chance of reversing to go back up again, which it did. Look, there we go. Here again as well, see this little dip went up over 80. If it goes up over 80, it's overbought, which means the sellers want to bring it back down.
Over 70 really, with the RSI.
70, yeah, 70 is set to this one. If it's over 70, it's overbought, so the sellers want to bring it back down. So if you go back to the candle, see, it went right up, and it was right up here on the 70, and the sellers bought it back down. They bought it back down, but it wasn't a massive drop. See, it just stopped in the middle of here. Okay, so you would have probably got out of that trade there to say, right, okay, this is not going to keep going, this is going to get out. And then let's see where else it hit. Right up here, it went to 70. Up here, this spike, the sellers bought it back down, but it wasn't, you know, it wasn't a good trade to get into because it's kind of in the middle. So really, you want to use this is if it goes above 70, it's a very good indication that it's going to come back down. If it goes below 30, it's a very good indicator that it's going to come back up. You can see that from the comparing it to the charts up here. So this is a very good indicator to put on your chart. Just
to show people something, Sarah, put your mouse where the price is now currently.
Yeah, here.
Okay, so you can you see that red line? That just indicates where the price is. So that's what MetaTrader 4 puts on for the price.
Yeah. This is the current price.
So you can see that the RSI, Relative Strength Index, is kind of very low. It's getting down towards the 30. So that would indicate there's probably a chance it's going to come back up, especially if it hits the 30 or goes below.
Yeah.
So if you put your mouse back on where the price is now and move back along that line,
see where it's
on that line. Look, it touched 3 times there. It touched back there.
Look at that.
Okay.
This is a very good resistance line. So it's got a good chance of this either reversing, or if it breaks through this line, it should keep going, or come back and retest like we said before. So that's a very good little indicator there. That's your RSI. Right, I'm going to show you another one now. Delete that off so you can see the screen. I love this trade because I'm in this one and I'm going to sell.
I wondered why you wanted to
I'm going to put that on the screen so I can keep an eye on it while I'm training. Right, okay, so I'm going to insert something now called the Bollinger Bands. I know that lots of traders love these. Right, this is going to look all a bit crazy. There's all lines jumped on our screen, look. See, there's 3 lines here, a top, a middle and a bottom. These are your Bollinger Bands. Now, what these Bollinger Bands do is they kind of cup your trade almost. So your trade is running in the middle, and your trade, your candles want to kind of stick to this middle line. Okay, they want to keep coming back to this middle line all the time. And if they stray away from this middle line, if they go up into the top Bollinger Bands, normally this is an indication that they're going to come back to the middle line. If they drop down below and go through these bottom Bollinger Bands, they pull back up and go back down to the middle. But sometimes they like to stay on these outer lines for quite a while before pulling back again. So this is just another indicator. So don't just
tell your way we were taught it about, like, the path in the woods.
Oh yeah, the way that it took me a while to get my head around Bollinger Bands, and somebody explained it to me in a way that I would understand as a mom, right? Okay, so I'm walking down a path with my 2 children holding my hand, and there's woods either side, and we're walking down this nice, safe middle path. Okay, so that's where we want to be. That's where we want the market to be. Now, if one of my children strays off towards the woods, like it has done here, they always come running back to mummy in the middle. They always come running back eventually. They might stray and wander around, pick up some acorns, but they'll come back to the middle of the path when they get a little bit worried. Okay, same here. Like, they wandered off this way, they've come back to mummy. They've wandered off again, come back to mummy. They're always going to come back to mummy on the middle line. Okay, so that's how I kind of understand Bollinger Bands. If, you know, somebody strays outside this middle line, they're eventually going to come back to this middle line again for safety. Okay.
Now, the other thing is, like Sarah's already said, sometimes you can see it's kind of clinging to the outer edge of the Bollinger Bands.
Like
so
here.
you can't kind of go, well, it's hit the outside edge, so it's going to snap back, because you might get in right at the start, and then it might cling to the edge of the Bollinger Bands for a while. So Sarah, can you put the RSI back on? And
if we put them together, the power of 2.
Yeah. So,
okay, so this is where it's clinging. It clinged out to the up at here, but look, it's in the middle. This isn't going up or down or anything. This is not above, this is not below. It's just staying in the middle for this whole ride down. It wasn't until it hit below 30 here on the RSI that it started to spring back again.
Right.
See? There we go.
If you move your mouse slightly to the right, a bit the other right, there you go. Put your mouse up onto the price. Now you can see, that's it, a little bit more right. So you can see where it starts to cling to the outer edge of the Bollinger Bands.
Yeah, it's clinging again here.
There. Yeah. And then if you look on the RSI, you can see where the RSI indicated that it would drop, and that coloured candle, you know, the solid candle.
That one there is this drop here.
Yeah. So the 2 in conjunction make a great kind of setup.
Great checklist. They really are.
So on the outside edge of the Bollinger Bands, but I'm going to wait for the RSI to be 70 or 30, depending on buy or sell.
Ready to come back in. Yeah.
And maybe a point of support and resistance as well, you know. So
definitely. So like the support and resistance on this line as well, you know that we're on a support and resistance line now at this trade now, see? So we're going to wait and see what this happens, but this is going below. So I would, if I was getting into this trade, I'd wait until this goes right below 30 to maybe get in for a buy to go back the other way again. But at the moment, this, you know, this could break through. But this is based on news. News caused this spike, so I wouldn't trade it anyway. Yeah. So, because as you knew from Forex Factory today, at 1:30 USD was news. Look, this is the news. This caused this at 1:30. It's now 2:17 in the afternoon. So look, the news caused this big spike down. So yes, that's why we don't trade news, because we don't really know, you know, what's going to happen. This could have gone the other way. Cool. So anyway, right, that's that. So that's your RSI and your Bollinger Bands. Right, I'm going to remove the RSI. I'll keep the Bollinger Bands on there for now. I'm going to insert another indicator. This one's called the Stochastic. And this is another really good indicator. It's called the Stochastic Oscillator. We just use default settings on this. You don't need to worry about changing settings. The default settings are good. So, right, this here is letting you know who is in control of the markets. Are the buyers in control or are the sellers in control? So we've got another indicator here. So it's 80 and 20 on the Stochastic here. So if a trade goes above 80, that means that, oh, sorry, I'm just going to phone on to silent.
So I thought that was me.
If it goes over 80, it's a good chance that this is going to drop again. If it goes below 20, it's going to come back up. Very similar to the RSI. What you've got on the Stochastic is 2 lines. You've got a buyer's line and a seller's line. So when the buyers are in control, the market's going up. If this red line then crosses over, like it has done here, this means that the sellers have gained control of that market and they're going to bring it back down again. So they bought it down, and then you can see the blue line, the buyers crossed over, they're in control, they're bringing it back up. See, the red line crossed over, the sellers have got control again. The buyers tried to get control, but the sellers took control right the way down again. So this is telling you who's in control of the markets. So at the moment, we have the sellers just taking control of this market because look, the red line's crossed, the buyers fought back, the red line's crossed again, and they're still coming down with the red line on top, which means the sellers are still in control of this market. So I wouldn't get in for a buy on this yet, even though we've gone below the 20 on this one. Still wouldn't get in for a buy. This could keep going down. So that's your stochastic as well. So you can use your stochastic along with your Bollinger Bands, along with your relative strength indicator. You can put as many indicators on your charts as you like. I just find it gets a little bit too much for your eyes to take, so I kind of just stick to 2 or 3. But look, when all these pair up together, let's go for this little example here. Look, they're on the outside the Bollinger Bands. They broke through the Bollinger Bands, which means they want to come back down. Your stochastic was right up in the 80, and the sellers took control by crossing over. Your RSI was right up here above 70, and then you had this big drop. Okay, so you could have got in here with all these indicators pointing for a sell and grab these pips here. Okay, so that's sort of all 3 together are kind of really good. Check, check, check. Yes, this looks good. Let's go for it sort of thing. So
awesome.
that is 3 indicators that we like to use the most. Paul, do you use these ones as well?
Always. And the strategy, we're going to share with you another indicator, another style of trading tomorrow that's going to blow your socks off.
Yeah.
That's amazing. Now, there's a strategy we have, and it uses these indicators. These are the most common, I would say, amongst, trader from beginner to kind of, multi-million-dollar trader, multi-million-pound trader. But these are so good. So tomorrow you're going to see me actually do a trade with this strategy, and you're going to see something that has, wait for it, an 89% success rate, independently verified, 89% success rate. But you want a free gift. So debated backwards and forwards about what we're going to give you today, but I actually found there's a book called Naked Forex. Okay, it's nothing rude, but we found a book called Naked Forex, and there's an online version, a PDF version online. So I'm going to put a link to that below this video. Now, the idea of Naked Forex is if you are liking what you've seen so far, and you're going to take what we've given you and you want to run with this, and you want to go and just trade like this, that will set you in good stead, okay? Because it doesn't even use any indicators. It just tells you what to look for with candles and things. So a combination of that and using some of those simple indicators will do you the power of good. But wait until you see what we're going to teach you tomorrow. It's something that I've been, we've both been doing it with great success, and there's about 1,600, well, there's over 1,600 people in our group, and a lot of the people in there are using it as well, just because it works so darn well. So,
and the beauty of it as well is that it's completely newbie friendly. Anybody that's not been through any training or anything like that can come in and use this, and have some brilliant results like we've been having. So it's very exciting, and that's coming up tomorrow.
I think I should just tease you. Just a little tease. Did it get to a certain, what I'm going to call the magic line? Yes, 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 yes.
All those yeses.
There's only 2 no's out of 50 trades.
Yeah.
Number of pips, 43 pips, 30 pips, 8, 5, 6, 5, 3, 9, 2, 6, 4, 6, 9, 8, 2, 6, 5, 3, 6, 8, 15. You only need 10 pips a day.
And these are 3 or 4 of these a day coming out. So you only need 1 of these, 1 or 2 of these a day.
Well, look, look today. I mean, these are all the times, but the 12. Where are we?
That's all the 12.
All of these have happened today. You only need these few here. You
don't need 10 pips.
So we'll explain what this strategy is tomorrow. But in the meantime, guys, go and play around. You got your MetaTrader 4, your demo account. So you can't hurt anything. It's not real money. Everything it's real trading. It is real trading. It's using the real markets. It's just virtual money. So go and have a play. Just put some, just put some stuff on. See how
these indicators on. Have a look at the charts yourself to see where the indicators are. What they're doing and how they're collaborating with each other and how they'll work. The best way to learn is to literally just go in there and play and just do it yourself. So have a little look, see if you can figure it all out, and have some fun with it as well.
So we'll see you tomorrow.
Yeah, brilliant.
Cheers, guys.
Bye.